Hi, this is Amir with the Bulletin Board Heroes, the socialist version for Monday, the 8th of July here at Zach's Traders Cafe. Starting on with the FTSE 100, which had a little knockback from that May resistance line there in the 50-day moving average, 82.50. But at least while we're above the floor of that rising trend channel from October at 81.40, we're still looking for the upside. Little RSI rebound on the 50 level, which is encouraging, and the fact that we haven't had to test the floor of that channel is also encouraging, as is the rising 50-day line. End of day close above 82.50. We're looking for 8300, and then June's 83.71 spike. Obviously, we've got the prize there, 86.50, the top of the channel, but at the moment that looks as though that is a long way away. If we do break down below 81.40, then there's a chance of hopefully a final test of the 80,000 area over the next 2 to 3 weeks, but it looks as though we're still within that channel. Next up is the DAX, and here having another go at breaking that resistance line there from May. The level there around 18,700, so we want to see an end of day close above that. If we can get that, then it's up towards the 19,000 area. Best case here by the end of next month would be 19,800, with the rising 50-day line, the RSI in the upper 50s, and double bounce off that 50-day line looking encouraging. On the downside, hoping that we won't have anything lower than 18,300 in the floor of that channel, although as you can see, over the latter part of June we did have to test down to 18,000, so it might be a final go at that area as well. Moving on to the Dow, and here still looking strong, RSI just below 60. We managed to bounce above the 50-day line and the floor of that rising trend channel from basically August last year, around 38,900 on several occasions. Worst case here is that we have to test June support rather, and maybe even May support towards 38,000, but hopefully at this stage it looks as though we are going to break through towards 40,000. Top of the channel there as high as 41,600, which is our prize for the end of next month if everything goes well here. Moving on to Bitcoin, which has been sickly of late, and here still looking for this market to consolidate. I think everyone's got their eye on the 200-day line there at 58,600. We've got a bit of bullish divergence there as well, which hopefully is or would be the trigger for a move to the upside. So lower lows for July, but higher RSI trace. So end of day close above 58,000. We're looking for the 50-day line there at 65,600. Worst case at this stage is a test of that March support line projection, 53,000, given the bullish divergence that we now have in the RSI window. Moving along to gold, and here we had a solid end to the week last week, and really approaching the 2400 level. Should be the case that we have a sort of dead cert on the retest of 2450, the best levels ever, and then up to as high as 2600 by the end of next month. This stage only back below the floor of the channel there from back in December. That's around the 2330 area, would delay the upside scenario. RSI at 60, which leaves plenty of room for further gains if the market is in the mood for that. Moving on to the stocks, and starting once again with the Avacta. It's slightly up today, and the good news is slightly up above the old gap, the top of the gap there at 67 pence. End of day closes above 67 pence, and we could be looking at a final leg to the rally up towards the 200-day moving average at 88 pence by the end of this month. As you can see from the recent history, we haven't been above the 200-day line since the turn of the year, and the rally that we've had and the reversal looks as though it's strong enough to get us up to at least the 200-day line, which you can have even in a bear market before the stock needs to turn back round again. Ideally, we stay on the right side of the previous target there, 63 pence, and the low today, 63.5 pence. So it looks as though the stock is listening to the charting. On to Aptamer, which gave us news regarding its partnership with Unilever. It's a rather soggy performance given the fact that it's got a partnership with Unilever, but we still have the bear trap gap reversal. We remain above the top of the gap there at 0.67, and the longer we stay above that, the greater the chance of a move up to the 1.1 pence area in the top of that rising trend channel base by the end of next month. On to Anglo-Asian, where it's a little bit of a lap of honour in terms of the ongoing recovery that we've seen here. the shares broke through the old May resistance at 70 pence or 74 pence, and that's now become a new support. The target here up to as high as 93 pence, and hopefully that'll happen over the next couple of weeks, and we can upgrade the upside. 50 and 200-day lines rising. We've got that extended uptrend line in the RSI window as well. Moving along to CapEx, and here, after what felt like days of consolidation in the upper teens, the shares broke that line of resistance there from last month through 0.21, above 0.21. We're still looking for up to 0.42, and that could happen by the end of this month. The shares also gapped up today, and that is a helpful sign. Bounces above neutral 50 as well in the RSI window, so it still looks set fair for the 0.4 pence plus area, especially while we're above 0.21. 88 Energy is next, where one's looking at it sort of kicking and screaming given the lackluster performance the shares have delivered over the recent past. But we did have two gaps to the downside back in April, and we've had a gap up now, so difficult to ignore. It could be a bear trap island reversal. Initial target here, 0.13, and if we get above that, which still is would be, I suppose, something of a miracle, then we're looking at 0.2 pence by the end of next month. Bullish divergence in the RSI window as well, so lower lows for July, lower price lows but higher RSI trace, so difficult to ignore that setup or potential setup there at 88 Energy at the moment, and obviously want to see the shares stay on the right side of 0.1 pence. On to Kinovo, and here the shares, again, too hard to resist in the sense that we've had two gaps to the upside, bear trap island reversal there, so gapping down in February and March, and then gapping up twice since then. That suggests that there's a proper turnaround here, and looking for the top of the triangle there from last August as high as 76 pence by the end of this month, or even sooner than that. The shares also found support above the top of at the top of the last gap, and above the 50-day line, plus there's been a bounce up on the RSI 50 level, so everything positive going on there at the moment at Kinovo. On to MicroSalt, which is always of interest given that when it moves, it really moves. Here you can see that we've broken recent neckline resistance to 95 pence, expecting the shares to do what they did in May and what they did in basically in February, and rally towards the top of that rising trend channel from back in February as high as £1.48 by the end of next month. Hopefully it'll be even sooner than that, given, as I said, that when these shares move, they really move. On to one of the stars of the show today, which is Mosman, and here you can see that we bounced off the floor of that channel. Basically the low area 0.44, where I suppose the line in the sand was 0.43, but the current position of the floor of the channel 0.046, and looking for 0.07 once again by the end of this month. I missed out on Helium 1, so better look at that as well. Here you can see that the shares have done us proud with the break of that resistance line there, 0.91, or 0.86 now actually, because it was falling over the recent past, above 0.86. We broke that on Friday, closed above the 50-day line, and also closed above the gap there at 1.03. And as in addition to that, we also hit the target there that we had there at 1.32. Above that particular line there from back in January, we're looking for the shares to at least retest the April peak there at 1.725. Best case, I suppose, is that we head back to the 200-day line, 2.2 pence by the end of this month, given the way that the shares can move so fast. But we haven't actually been above the 200-day line properly since back in September, so it would be a big change. But a bit like the situation that we've seen before in other stocks, especially Avacta, once you have such a strong move, then the 200-day line does become a magnet for price action. So I think fans of the shares probably looking for 2.2 pence. Only back below the 50-day line, 1.1 pence, really delaying the upside scenario now. Next up is, back in alphabetical order, is Petro, and here you can see that we've had a bear trap reversal with the gap down, and then coming back above the old November support there at 2.5 pence. Above that, we're looking for the shares to fill the gap up to 3.5 pence by way of the 50 and 200-day lines, currently just below that particular level. But the key here is that there's no end-of-day close now, back below 2.5 pence. On to Phoenix Copper, which looks like it's getting its act together in terms of bouncing off the floor of that rising trend channel, and an end-of-day close, hopefully today, back above the 50-day line at 20.3 pence. The initial target here, obviously, the May resistance there at 26 pence, but ultimately we're looking for 36 pence as soon as the end of next month, or even sooner than that. The missing ingredient has been that the RSI has been below 50, but it's just pushed above that now, so that is another positive. What we don't want to see here is any end-of-day close back below the 200-day line at 18 pence. Video I covered Synergia yesterday, and the shares have responded well today. Neckline resistance there at basically 0.13 on that, and above that we're looking for 0.21 as soon as the end of next month, or even sooner, expecting the shares to do a repeat of what they did in January, February for July. Moving along to a stock which I haven't looked at for years, Science and Sport, but again, too difficult to resist this one. Here we can see that there's a rising trend channel there from back in April last year, top of the channel there, 30p, and the step fashion rising that we're seeing for the shares suggests that we'll hit 30p while we're above recent support at 17 pence and the 50-day line, which is rising along with the 200-day line. On to the last two. First one is Trinity, and here you can see that we're breaking the 200-day line for the first time since back in September, so get out the champagne. End of day close above the 200-day line. We're looking for an initial target here at 60 pence, hopefully in the next couple of weeks, ultimately as high as 75 pence, the upper parallel of that rising trend channel base from December, and looking for that by the end of next month. 50-day line rising very well as well, and that is encouraging. Finishing off with Touchstone, which I think I looked at on Friday, and here falling trend channel, but the shares have managed to gap higher, or did gap higher on Friday, pushing through the 50-day line, which is very encouraging. And the view at the moment is that the longer we stay above June neckline resistance at 33 pence, the greater the chance of move towards 45 pence by the end of this month. We've also got bullish divergence coming in there as well. So the lower lows for July in the price window, but higher RSI trace. Upside valid, at least, as I said, while we're above 33 pence. That's it for me today. More updates tomorrow.